Hey guys, Nathan here. It's late Sunday night. It's March the 1st. Just wanted to make this video to go over an update of the previous month for my M1 Finance dividend portfolio and go over three main topics with you. Number one, just the changes that I made in my portfolio over the past month since my last updated video. So just some of the changes in the progress and activity reporting, all the reporting and everything, the activity, the dividends, any changes I made. And then secondly, I'm going to be talking about all the different things in the news and all the panic with the coronavirus, and just kind of talk to you a little bit about that and just what my focus is on. And then thirdly, I'm going to talk about something actually that I've been doing on the side with a artificial intelligence software to actually trade in the Forex market, which is bigger than the whole entire stock market. Okay. And I'm up 5% for the week, whenever all my other accounts were like down about 10% or more. So I'll be sharing all those three different things with you. So if you are interested in getting a quick snapshot of my portfolio with M1 Finance, I will include a link in the description below. And if for some reason this is your first time here watching, I am going to be doing these updated videos each and every month, just sharing with you my dividend portfolio for passive income, which is what you're seeing here now. And just focusing on just my strategies each month, any changes I'm making, and then ultimately, giving you the opportunity to either follow along by sharing, like I said, my portfolio in the link below, or even just getting started yourself with an M1 Finance account, which you can get started as well. The link will be below. That's my referral link. Just by signing up with M1 Finance using my link, you'll get $10 for free after you deposit money into your account and start investing. Okay. Number one, like I said, just the changes that I made in my portfolio and just what's been going on here. So some of the activity for the month and really the previous video that I did. If I go back here farther, let me go back. So some of the changes that I made. So obviously I put some money into my account, more money into my account since the last time, right? So I started depositing more money in my account, $100 here, $250 there. So I started adding more buys, okay? So I'm starting to get paid more dividends as well. Obviously, you can see the ripple effect of these dividends. They're really starting to take effect now. This is the second or third time, depending on whether it's paid monthly or quarterly, these dividends I'm starting to get paid on, okay, since I got started. Some of them fourth or fifth time, since it's going on 4 to 5 months. But ultimately, getting paid these dividends, just reinvesting these dividends into my account and just making sure those things are being taken care of and just keeping track of those dividends, which is nice. And I actually deposited another $100 here again, okay? Now, when some of the I'll go over that later. I was going to mention something with the coronavirus. So February 3rd, actually, I made some changes here. So if you click on this, I actually ended up selling the QSR restaurant brands, which is like your Tim Hortons, your Shutterstock. I sold that too, but Tim Hortons, can't remember. Oh, Burger King and Papa John's. Not Papa John's, I'm sorry. I'm drawing a blank. The chicken sandwich one. What is it? Competing with Chick-fil-A. I forget the name. Anyways, you can do that yourself, the research yourself. I don't know why I can't remember the name. It's like on the tip of my tongue. I just can't remember it. Popeye's chicken. Okay. So, okay. So like I ended up selling that position. I don't know. I ended up buying it a few months ago. I bought it simply because the dividend was a good dividend, and I felt like it was going to be going in an uptrend. But it just with the performance and really I don't know really why. Honestly, I don't know why. I think I just bought it just because the dividend yield was pretty nice, and I felt like there was potential for it. But then just after owning it for a month or two, I ended up just changing my mind and finding more valuable stocks that I felt like for long term that would be able to benefit more. Okay, so I ended up selling that one. Like I said, it was only in it for about a month or two, and I simply just got rid of the Shutterstock Rock Capital just to ultimately, free up some space in the dividends and other areas with finance. So I got rid of that one. Now this one is a BDC, which is a business development company. So they're going to be paying you distributions usually on a monthly basis. All right. So like I said, I mean, those are the two cells that I had. Now the only one I may add back into, which would be the Shutterstock Raw Capital, but I'm thinking about really just kind of putting that portfolio possibly in a tax-free account, because those are the BDC companies, which are really good, just long-term growth investments. If they accumulate tax-free, I think they'll be very, very beneficial. They pay high yields for owning shares and owning that. So, but let me go back to some more of the cells here. So those are two there, and then I believe there was one more I had for the month. Yeah, so the other one that I had was for WPG, which is Washington Prime, which is a REIT. Okay, so that REIT just hasn't really been performing too well. I can actually pull it up here too. Hasn't ultimately been performing very well, and I was hoping by holding it for a while it would potentially go on the increase, but that is not the case. All right, it was not the case at all. So it's just continuing to decline, as you can see, since I purchased it back in September, right here. Okay, and it's just was doing okay, and it's just been going downhill. So Washington Prime is just simply just basically a company, a REIT company that invests into multiple retail properties, specifically shopping centers and malls. Okay, and the reason why I bought it was a smaller company off of the Simon property groups. Okay, a smaller but very similar REIT. But Simon was overpriced, by $123. So Washington Prime, it's definitely one I'm going to keep my eye on. Okay. I did have it in my watch, but it was off. There you go. So I'm definitely going to keep my eye on that some more, just because the yield is very high, and I think it has potential to grow. It's just very tough with just all the different changes with malls closing down across, the United States, and with online shopping. So I think it still has potential. It's just not the right timing for it. So that's why I did sell that share or that stock, okay, for my portfolio. And that was really it. That was it for the companies that I sold over that time period. Okay. So what I'm gonna do next is I'm actually going to go into my portfolio here, and it's going to show you the companies during that time that I purchased. Okay. So I added the gaming and leisure. All right, I added this stock to my portfolio just for another diversified REIT that just focuses on a little bit of a different sector that has good long-term growth, that pays a good dividend of 6.27%. Okay, and was priced accordingly, and I felt like was or did have the opportunity to continue to grow long term. Okay, so that's why I added those. Or that's why I added that stock, was the REIT. All right. Finance. Let's go into finance. The other one that I added to my portfolio, which right now, since I recently added it late, I haven't deposited anything because of all the coronavirus stuff that started to happen end of January. I haven't deposited anything in addition to balance it out, but I did add Horizon Technology, which is a finance company, okay, in the finance sector that pays a higher yield. It's more like a BDC, business development company. Okay, so I added them into my portfolio as well. Go back, and then if I go into consumer, the other company that I ended up switching out, basically for the the Popeyes chicken, the QSR, right? QSR. Yes. Restaurant Brands International. So the one I ended up switching out for Burger King, Tim Hortons, and Popeyes chicken, all right, Louisiana chicken brand. I ended up switching that one out. As you can see, I switched it out right around here. Okay, it just was not performing very well. I had a feeling it would go up, and it just, I mean, it still can, but I don't know. I just wasn't really excited about it. And sometimes that's one of the stocks that you want to be excited about it. So I'm actually switching it with TJ Maxx, which has dropped a lot less compared to that stock. And projection wise, it's just, I feel like it has more opportunities to grow and just is really focused, and it has done a great job. It is not paying as high as a yield, which isn't always that bad. But if I can pull it up here too. So again, the yield is not nearly as high. QSRs are over 3% yield. But I feel like long-term growth, that TJ Maxx, I'm not a big fan, like I said, of those brands with Popeyes Chicken, and Tim Hortons is a good brand, but they're struggling because of all the other issues with Burger King and with Popeyes. So, so that's why I wanted to add TJ Maxx. Just incredible growth, and I feel like it's going to do well even during a recession, because if something does happen with a global recession, something with the coronavirus, or the stock market crashes here, I feel like TJ Maxx still will do well, just simply because of the discounted brands and off price of the retail tags. People are going to be shopping less and less at premium stores or more expensive stores, and getting good quality brands for lower prices at TJ Maxx. Okay, and I personally shop at TJ Maxx. My wife does. Other family members I know shop there. And I just felt like it was just a good quality stock that will continue to at least long-term grow, and dividend yield, I believe, will continue to grow because it's been on that track. Okay, and the payout's been great. So I added that stock to my portfolio. That was the last one that I changed out. And those are really the changes I made over the previous month. So nothing really crazy that I made in regards to changes, but just making those small changes, and just different things that I felt like I wanted to add to my portfolio, I ended up adding. All right. So I mean, some other ones I was looking at were in like technology. I was thinking about trying to get some other companies here into tech, which I never did that. Okay, so it's just different things like IBM. I was thinking about investing in IBM, still am, but was just thinking about adding it in or removing one of the items from my portfolio in there as well. But that's just kind of on the back burner. And like I said, these are all things that you can look at as you add different stocks to your watch list into M1 Finance. You can continue to add those there and just see how they're doing and how they're performing, and just keep an eye on those stocks. Obviously, I have a ton in here, as you can see. And there's, like I said, there's lots of these that I like and I want to add. The only thing that stinks is, with M1 Finance, you are limited, and a lot of other of these brokers that are robo-advisors are limited to 100 stocks in one particular portfolio. So, so anyways, all right, and the next thing I want to go to is just all focused on the coronavirus, okay, and just how all the different news, all the reports that are showing, and just all the dramatic All right, so the next thing I want to focus on is just the market news and all the craziness that's been going on over the past week, and just people's accounts dropping from anywhere from like 8 to 10%, 15 to 20%, and it's been crazy. So I've even had family members like ask me, what should I do? And my accounts dropped by, my mom's retirement account dropped by like $22,000. She has over $200,000 in one of her accounts. And she was like freaking out, but that's normal because that's what people are doing, and a lot of people, especially her age or older, are possibly thinking of taking their money out of the markets and just kind of getting, taking away and getting what the bull has produced for them. That bull market has just been such on a steady, consistent growth each year that they're scared. A lot of people that are either retired or going to be retired, their pensions or retirements, or those people are freaking out, basically, just to sum it up. So for me, if you're a smaller investor, you'll have less money, you're just kind of starting out, it can be, worrisome too. I mean, it's not fun seeing those accounts drop. My Roth IRA account, which I just put $3,000 in right before all the coronavirus crap started in January, those stocks you can see here, those dropped. I just put money in. They were up for a little bit for the beginning of February, then they've just been dropping. Right before the market picked up on Friday, these were both at like 10, 11%. This is the Vanguard REIT ETF and then the Vanguard Total Stock Market ETF. So yeah, so me putting 3,000 into that, I actually put another. It was distributed between those. I'm sorry, right at the end of the year, I put money into the Vanguard one, and then after the end of the year, to start out the year, it was the Total Stock Market ETF, and then I put another 1,000 into the Vanguard Tech because that thing was just on a roll, and I just want to continue to ride that bull market. Obviously, it didn't work out in my favor, but that's okay. It's a long-term growth strategy, right? We want to try to build long-term growth and just focusing on the long term. And that's the plan I have for you. You know what I mean? That's the plan I have for myself, and that's what I recommend to you. I mean, I'm not a stock professional. I'm not a financial advisor. It's just my plan, my growth. So sometimes you may hear people say that during the dips in the market lowering, it's opportunities for you to buy. That's something I've been considering here this weekend, is just getting ready to maybe deposit some money here into my M1 Finance account and just buy, not a crazy amount, not like $1,000 or $2,000, maybe an extra $250, just to buy back that drop that I've missed, since I put in money here and here, right? So just to buy back a little bit of that money, or just to get it at a lower price, because eventually, whether it does go up, this week and then continues to ride again on another bull market, or if I buy it now and then it continues to drop, my plan or my goal, right, is long-term growth. So even if it does drop way, way, way back down to 20 or 30% or even maybe 50%, half my portfolio, then whether it takes 5 years or longer to get back there and higher, it's going to do that, just because the market, if you back test and look at previous markets through the years, they up and down with big waves down and then back up. Okay, so it's always going to meet at a higher level. It's just a matter of when, all right, and if it's going to continue on that bull market or if it's going to have a bearish, and for how long. Okay, so this is just if you are going to be focusing on a long-term play, don't be freaking out. And if you are interested maybe at getting stuff at a lower price going into the market this week, or if you are watching this tonight, Sunday, March 1st, it would be an opportunity for you to start buying some of the dip, all right, if you are interested. 10%, I feel like it's not quite enough, just because even though I have lost money in my portfolio here over the past year, 10, almost 11% for the week, I'm just not at a time where I feel like I want to buy anything, even at an extra, $250 or $100. I'm considering it still, but right now I'm telling you that I'm not going to be doing that. If I do it, you won't find out until my next updated video, but it's just something I feel like, with all the panic and what's going on, this is something that probably, and again, I'm not a financial advisor, don't take my advice here, but just from different things, not to say that you should or shouldn't listen to the news either, but just from previous outbreaks and different things that go on, this could cause a consolidation in the market for a couple of months, where it just continues to go up and down, not much growth or not much of a crazy more drop than what it already has. But again, I don't know exactly what's going to happen, what the future holds, but that's just my thinking and my plan. Okay, so going forward, that's what I'm going to be focusing on. If I do end up adding, and depositing more money and buying at the lower dips, you'll obviously get that update in the previous in the next month going forward in my next updated video. But for right now, that's my plan. My account, it sucks that I've lost, and I was on a great ride. I was at 11% before the dip in gains. Now I've lost 11% almost for the week. Total for the year is 5.93%. All right. So I am down, I'm down, which is on a small account, a little over $200. But the nice thing is I do have some of those dividends, right? I do have those dividends earned. And my goal, my plan long-term with this passive income strategy is to get to even with the market gains, right? Or even if the gains are low, right? The dividends are out earning those gains, or the negative gains, right? If it gets lowered, if I'm losing money. If it's growing, that's my plan too. If it's growing, I want the dividends to pay just as much, if not more, right? Monthly or quarterly for those dividends. Okay. So my dividends for the previous month were $14.50. And then, like I said, for the year, $59.49. Okay. So those are the changes that I made. Those are the different things that I have going on with my portfolio now at the time. And then just to, reiterate a lot of different things with the coronavirus more, it's just all the different things with rate cuts and the Dow dropping these crazy amounts and all these different things. Those are the things that you have to do on your own, to do more research. Obviously, the news is going to be having different things going on with the news, whether it's to do this or do that, or other advisors telling you to do this or do that. At the end of the day, that's completely up to you, right? That's up to you what you want to do. But something that I did differently here last week with all the craziness is, instead of trying to add more money in, I've been slowly doing some trading with the Forex market, okay? And to show you my account for the week, I'm up 5%. All right, for the previous week. As you can see, I deposited just $500 instead of putting that money into the stock market. I put it into the foreign exchange market into a separate account. All right, and it grew over the past week by just over 5%. Okay, so that $500 was actually $507, grew to $532. Okay, that's 5% for the week. That's awesome, right? So my goal with this and using this artificial intelligence software, which does a lot of, it's not a hands-off approach, but it's less hands-on, where it pretty much takes into effect all these different algorithms to help you take these trades for you using the software. Okay, you do have to create and have your own settings set up for how risky or how conservative of a trader that you want the software to be for you. But this is something that I'm doing on the side just to see if this is going to be something that can be a long-term growth strategy. And with Forex, it's an incredible way to compound your account and growth over time, because regardless of whether the market goes up or down, like the stock market with recession or crashes, we can ride in different ways. We can trade, and the robot, the artificial intelligent robot that this software uses, can make those trades for you while the trends are going up and down, and you can benefit or earn while the stock market loses money. Okay, so that's the powerful thing about it, and that's what I like. I mean, I was down, I showed you over the past week, 10% about, and this gained 5% for the week. Just imagine if I had more money into this account. Just imagine if it earned 10% or 20% for the week, which it has done before. This software has been back tested with Forex. It's earned 20% or more sometimes, in a month. 10%, 15% in a week, 20%. I've seen other people have 15 to 20% for a week, which is crazy. And that doesn't even include the additional trades that you make when you start to learn how to successfully either day trade or swing trade, etc., in the Forex market as well. Okay, it's bigger than the stock market, and it's just an incredible way for anyone to eventually earn while those dips in the stock market are falling. This is a way for you to earn or balance out those losses. Okay. So this is something that you are interested in. Again, I'm still testing this out and just seeing how it performs for me. But if you are interested, go ahead, send me a message, contact me on social media or here on YouTube, and just let me know if you're interested. We do have a free group that you can get access to on Facebook. So just go ahead and message me. I will include a link to my contacts in the description for social media as well. You can contact me, and I'll keep you updated on this on the side as well, and just see how it performs. And eventually, if it does well, my first month, it may be something I'll continue to update videos on as well for those of you interested in possibly using this artificial intelligence software, the robot software, that it's just no emotions are involved, right? It's all artificial intelligence. It's all programmed in based off algorithms, and it's going to take those trades for you. There's not emotions or fear or anxiety and stress, trading like someone like me would, right? But it's all based off artificial intelligence and making smart money for you. Okay. So if you're interested, like I said, you can message me on social media, and I can share with you a little bit more about that. So those are the updates I have. So my M1 Finance account, the changes that I made, all the different changes going on with coronavirus and all the different fears, as well as the 5% that I earned trading in the Forex market using an artificial intelligence robot, a trading robot for the foreign exchange market for Forex. Okay. So that concludes today's video, guys. I hope you received value. Sorry if it was a little bit long-winded, but I just want to make sure I went over every little detail for you of all the changes and the different things that I've done over the previous month with this portfolio. And all the craziness with the coronavirus going on. So I hope nothing but for the best, and I just continue to pray a blessing over our country, over the U.S. and the United States, and that no one else really is just affected by it, and just things start to diminish here slowly and surely, that the stock market will grow, the U.S. will be prosperous, and no more lives are taken. That's my wish, and that's my blessing, and I pray over that for each and every person. So all right, guys, so that concludes today's video. I will see you in the next one. Make it an incredible day, and have a good night. Thanks, guys.